edition of the Daily Market Commentary. I am your host, Chuck Fulkerson, on this Friday, the 8th of June. And it is, like Limp Bizkit says, we're rolling because it's contract rollover day. Hip, hip, hooray. We're moving to you. I mean, like to the you. Like, I'm not moving into your house. So I hope everybody had a great trading day yesterday, as we did come down a little bit off of those highs. So we will talk a little bit more about that today. If you are new to the channel, do me a favor, click that little subscribe button down below. Do me a favor, hit that little thumbs up thing that says like. It'll take you a tenth of a micromillisecond, but it helps a lot in the Google Analytics searching magic machine device thing. So do me a favor, that would be great. Throwing a like on the video and throwing some comments in there is great as well. So we're going to take a look at the markets like we do every day, looking for breakouts and reversal trades, bearing in mind that we leave the lines on the charts all the time. Now, just because I leave the lines on the charts doesn't mean that I don't update the trades throughout the day, and we're going to talk about that today, specifically in the Nasdaq trade from yesterday, because of that's how we use Twitter. So let's go ahead and dive right in. Looking at the ES. So on the ES, we are down a little bit this morning. Now, why are we down today? A couple reasons. Well, first of all, we've got contract rollover, so we certainly, hopefully, aren't in a position to hold things over that contract rollover period. Doesn't mean that my areas of demand aren't still going to be valid. This buying point could still be very valid. If I'm looking at this particular contract, I'm here looking at specifically at the September at the moment, although this one was formed in the June. Why is that even relevant? Well, right now we've rolled over to the September contract, right? But if I look specifically at the June contract, here's what you'll notice. This level, though the line is no longer present, this level was hit here in the last hour. So the line's not present because, the way that Thinkorswim works is your lines don't hold over when the contract rollover occurs. Like, even though these lines were drawn on the ESM contract, in the algorithm, it's just /ES, and /ES just takes me to the more current contract. So there are going to be slight variations around rollover time, especially when you're using these smaller time period charts. So just keep that in mind. We could be bouncing off of this level, even though this level, is even though it doesn't look like we've hit this level. If you're still trading the M contract, then you would have bounced off of that level today. So keep that in mind if we do get a little bit of a bullish move at some point today. I want to add an area down here, which I think has a lot of validity and a fair amount to it. I was kind of holding off on it for a while, but if we do break below here, I don't really see any of these as great stopping points until we get to this area here. I like this one significantly better as a potential stopping point if we do break below there. Now, why is that? Well, because that's also a little bit further into this area of fair price value. It's also into where we had some resistance right here. This resistance on the 4-hour time period does still hold up. So as we are bouncing off of this area right now, I'm actually going to remove these lines from the chart because this tells me that we've hit it when we look at the M contract. So just kind of keep that in mind. Let's go to the Nasdaq. So here in the Nasdaq, what you can see is that our level that we identified yesterday, price blew right through the level. Well, that is an important point, that it did blow right through the level. However, for those of you that watch this thing on a daily basis or fairly regularly, one of the things that's important to do is to keep, if you're not on Twitter, get on Twitter. There's a lot of really great traders out there on Twitter that put out a lot of really cool things that are worth paying attention to. Not the least of which being me. But I do put sometimes updates on what we do in the daily market commentary. So yesterday, here was the tweet that I said, hey, here's the daily market commentary. Go watch it. And in the thread, what you'll see as we said, NQ near entry, but ES is not there to confirm. Use more caution in these scenarios, maybe move to a dashed line entry. Now, the reason for that is because of exactly what happened. As we came into this level, we actually went right through it. It did not, it broke below this area before then coming back out. So there's no reason to enter into the long at this region if you follow that logic. The reason for that for me was that the ES was nowhere near its potential reversal point. So I'm going to want to use the ES to confirm my Nasdaq levels as often as possible. And I don't want to certainly short the all-time high. So I'm not going to tell you that I caught this move down. Matter of fact, nobody should have caught this move down unless you were shorting the all-time high. And to me, that's too much risk. I'm sure a number of people did. But I'm not one of them because I don't tug on the Superman's cape. I don't spit into the wind. However, now that I have a lower swing low and a lower swing high, if you're so inclined, somewhere in here, we may get a little rally up off of where we are, and you may get a little reversal right here on this 15-minute time period to go short. And gapping down at the open would be a pretty interesting setup. So if you do get a shot, you may get a little rally back up. And on the hourly chart, it's this little region right here, this 7150. Call it right around 7150 is the reversal, is the potential reversal in Nasdaq. Crude oil. So in crude, last night we came really, really close to getting our fill, and we didn't get our fill. I had tweeted out, just be a little cautious as we're arriving into here. Remember, it's a purple line, so it's a little bit lower probability anyway, so we're still in between those regions, so just be aware of this. And then gold is also in between. Now, why am I seeing all this choppity chop? Well, we've got the G7 summit happening this week. And so I'm not holding anything over the weekend. I'll be the first to tell you. This is not the week for me to hold things over the weekend with the G7 summit happening. Who knows? There could be taxes on sugar cubes. And once again, to those of you that know me know that I'm not political. I don't really care. However, I don't want to take any undue risk if it's not necessary. So looking at bonds. So look at our bond trade. So here was our bond level yesterday. We call this a kiss, bang, bang. Look at this. Mwah! We touched the level and then strong move out of that level. Hopefully that was able to catch a little bit of a profit objective for you. Ideally, you will have, once you see this big move down, you take your stop, move it down to in this region here. So locked in a bit of profit. I'm going to leave this level on the chart. I'm just going to change it to a dashed line because I still think it's a valid level because we just did a touch and go. A touch and go of that level means that this level is still valid off of that move. So that was a nice little kiss off of that zone. The Aussie. So in the Aussie, we're in our level right now. So let's see how this rolls. Now remember, we've got very limited profit margin on this thing because of the basing that we had just before it here and here. So very limited profit margin, so be aware. Hopefully you were able to ride the breakdown that we had earlier in the week from way up here all the way down to here. And so maybe you take this as a profit target and you're coming back up right now. So nice, that breakout trade worked out brilliantly for those of you that are looking at those breakouts as we set them up. The euro. This one is showing a little bit of weakness on our breakout. We got a really nice run up, and if you are practicing moving your stops to below these fairly nice pivots, then you've locked something in, but we did get a really nice run up, and so now we're continuing that rally higher, remembering that this level was formed on the weekly time period. So if you did get in, your stop wouldn't be until below this green candle. It wouldn't be below until this red candlestick's low. If you're looking at the longer term candle to candle investor style, your stop is going to be still way down here. So, but as a trader, you should have been able to capitalize on some of that breakout move. Even though we've given some of that back today, and that's just a lot of what's happening with the fear on the G7 summit. The Canadian dollar came up again to our descending trend line, kissed it, came back down, and so we're just still in this big old triangle that we had drawn earlier in the week. pound, yen, kappa. So our level in the Japanese yen, we are up to that level as we speak. So we're getting the reversal in the yen as well as in the Aussie at this very moment. So let's see how those trades play out. Make sure that you manage your stop accordingly. I think that this one you'd be looking right around in here for a profit target. So not a whole lot of move coming out of this one at the moment. Copper, we're still pretty far away from our entry down here. Nat gas has been kind of flirting with our potential entry for the last couple of days, has not yet met that zone. And then the Great British Pound, we are still above our 15-minute level. Remember, those 15-minute levels always have lower degrees of probability, so measure your risk accordingly. Let me take a look at soy, as I promised I would look at soy. Here was our breakout in soy below this blue line. So I said yesterday, well, listen, if you didn't get in on this breakout, you have another opportunity below this one. So you've been richly rewarded if you decided to follow it along. Unfortunately, I wasn't richly rewarded because soy's not on my normal trading list. But I got to tell you, looking at that move, it might start to be. So hopefully you guys were able to catch that. Do me a favor, if you were able to catch any of these trades, leave a comment in the section below. I want to hear your comments. The comments are important to me. It means a lot when I see what you guys are doing. What's most frustrating to me is when people watch these kind of things every day and then they don't ever take the trades because they're not willing to take any risk. I mean, these are designed to be educational examples to teach you how levels form over time, but based upon your own risk tolerance, your trading plan, your trading style, you got to decide if it makes sense for you. So, all right, everybody, well, I hope you have a great day. I appreciate you joining us here on the Daily Market Commentary, and we will see you on this weekend for the weekend edition. Have a good one. See you.